Hello friends, welcome to Learning with C. This is the seventh video in the series of macroeconomics. The topic is balance of payments. Let us look at the definition of balance of payment first. It is a statement of accounts of countries' international transactions. That is, all the economic transactions that a country has with the rest of the world for a particular period, which is generally a year. These transactions can be done by either individuals or firms or government. These transactions can be of four types: either visible trade, which is called as export and import of goods; second, invisible trade, export and import of services; third, international sale and purchase of financial assets; fourth, international sale and purchase of real assets. Financial assets example shares and bond purchase; real assets like building, machinery, or any other fixed asset. Now let us look at the type of BOP accounts. There are three types of balance of payment accounts. They are current account, capital account, and official reserves account. Let us look at each one of them in detail. Current account components. The current account components are of three types: visible trade, invisible trade, and current transfers. Let us look at visible trade first. Visible trade includes export and import of goods. Goods are also called as merchandise. These are tangible and can be seen while crossing the borders. The second component is invisible trade, which comprises of export and import of services that are intangible and cannot be seen across borders. Services can further be of two types: factor services and non-factor services. Factor services, as we already know, are of four types: rent, wages and salaries, profit, and interest. So, factor services can be compensation to employees and investment income, which includes rent, interest, and profit component. The second part is non-factor services, which are all other type of services apart from factor services, like legal services or banking services, etc. The third component of current account is current transfers. These include invisibles, that is, again services for which there is unilateral transfers like gifts, grants, etc. Let us look at the current account balances. There are four types of current account balances. The first one is trade balance. Trade balance is on account of goods only, that is the merchandise. It is calculated as export of the goods minus import of the goods during a particular year. If the export of the goods are higher than the import of the goods, then it is called trade surplus because the country receives more inflow of funds. When import for goods are higher than the exports of the good for a current year, then it is called as trade deficit because it leads to depletion of foreign reserves. The second type of balance is invisible balance. This comprises of services, that is factor services plus non-factor services plus current transfers. So invisible balance is the sum total of balance of factor services, balance of non-factor services, and balance of current transfers. Third one is current balance. Current balance is the sum total of trade balance plus invisible balance. That is, it includes exports and imports of goods, export and imports of services, and current transfers. There is another type of balance which is called as goods and service balance. This is calculated by the sum total of trade balance plus the balance of only the non-factor services. Let us look at capital account now. Capital account includes receipts and payments on account of such transactions which impact the asset and liability status of the country. There are two principal components here: borrowing and foreign investment. Borrowing can be of two types: external commercial borrowing or external assistance. External commercial borrowing is loans that are available to the country at a current market interest rate. and external assistance is loans is available at a concessional rate to the market. Second type is foreign investment. Foreign investment can be again of two types: portfolio investment or foreign direct investment. Portfolio investment includes FII, that is, foreign institutional investors. These investors are generally mutual funds or hedge funds of foreign countries that invest in countries' share market or bond market. And in case of foreign direct investment, the companies invest in the ownership of the shares of the company. That is, they don't trade in share market, but they actually own the shares of the company and becomes the owner of the company. Let us look at the other components of capital account. First, NRI deposits. NRI deposits are those deposits which are done by NRIs in the domestic economy. These does not include transfer to families. If this is a transfer to family, then it would be part of the current account of the BOP and not the capital account. The second is banking capital. It refers to the foreign assets that are held by the commercial banks. The third one is short-term trade credit. Short-term trade credit. It arises on account of purchases in the international market without making immediate payment. So, the repayment on account of short-term debt will lead to a negative or outflow for the Indian economy, and hence it is recorded as negative in the capital account. The third component of balance of payments account is official reserves account. Official reserves account is maintained by the RBI. That is, Reserve Bank of India is the custodian of the foreign exchange reserves. All the foreign exchange transactions are routed through RBI. If an official reserves account balance is positive, it shows increase in the reserves for the country. And if the official reserves account shows negative, then it shows decrease in the reserves for the country. In context of balance of payments, we need to understand what autonomous items are. These are the transactions which are undertaken by the country with a view of making profits. Due to autonomous transactions, balance of payment shows either a deficit or a surplus. This involves movement of goods, either consumer goods or capital goods across the border, and these are therefore the above the line items in the balance of payment account. Another important term is accommodating items. Accommodating items refers to those transactions which are undertaken to correct the BOP imbalances or restore BOP equilibrium. These transactions does not involve any movement of goods across the border, and hence it is free from profit considerations. It is therefore below the line item in the balance of payments. Let us look at the significance of balance of payment accounts. First, foreign exchange status of the domestic economy. Balance of payment shows the surplus or deficit situation in the country, which reflects the increase or decrease in the foreign exchange reserves for the country. Second, net factor income from abroad. BOP depicts the factor incomes and factor payments so that we can know what is the net factor income from abroad, which is an important component of national income. Third, component of aggregate demand. Net exports, which is export minus imports, is an important component of aggregate demand. Rising exports show rising demand of domestic products in the foreign market, which shows increase in the foreign exchange reserves ultimately. Whereas rising imports would reflect lack of production in the domestic economy, and therefore it reflects depletion of the foreign exchange reserves. The fourth point is market potential. Market potential refers to the size of FDI and FII flows. If the FDI and the FII flows are large or increasing, it shows high growth potential of domestic market. And if there is a greater outflow of FDI or FII, it shows that the markets are decreasing in growth or they are collapsing. The fifth point is monetary and fiscal policies. Depending on the BOP status, that is the balance of payment status, whether it is in deficit or is in surplus, The government formulates foreign policies, export-import policies to achieve the favorable status of balance of payment in the country. So friends, hope you find this video useful. If you like it, please share and subscribe my channel. Thanks for watching.